Shares of Instacart are up nearly 85% this year, but Deutsche is still initiating their coverage with a hold and a $37 price target. It's currently at $43. Analysts give the company credit for building a profitable grocery delivery platform, but they say fundamentals will be challenged over the next year or two due to increased competition and the premiums users pay in third-party apps. Joining me to discuss is Lee Horowitz, co-head of Internet Equity Research at Deutsche Bank. I really feel, Lee, like I've got I know this one cold. I could tell you like down to the penny how much we're paying in fees. What about the Costco partnership, though? That's got to be a pretty lucrative one.
Yeah, we see it as a nice add-on to where the company stands today. But ultimately, the affordability problem on the platform is a large one, and Instacart can't really set its prices for the goods that their grocers set on Instacart. So with affordability being top of mind for consumers, those price premiums that grocers often put on their goods on the platform, we see as a big challenge.
Is there evidence that there's actual pushback, or is this more of a possible event next year?
The evidence of a pushback, as we see it, is we've seen digital adoption rates of online groceries slow materially post-COVID. So what you've seen in this rising inflation environment is that overall online grocery share of total grocery has slowed, and we think that is an output of these affordability challenges. So we've seen the evidence sort of at a industry level up until this point.
That said, some of us are pretty desperate to get the groceries delivered almost at any cost. And in that case, how big is that, is that market base, do you think? If it were just the people who really had to do it, is this still a profitable business and a big one?
Well, I think I think they've proven out that it is quite a large and profitable business as it stands today. They have gross order volume north of $30 billion at this point. For the people that can and can afford it and need the groceries sort of delivered to their home, they built a large and profitable business. But obviously, that is a small fraction of sort of the total available grocery TAM that's measures north of $1 trillion. So it's about bridging the gap to that larger pie, and we see some challenges there.
How much penetration do you think grocery delivery will ultimately have in this country?
As it stands today, it's probably somewhere around 14-ish%. We've seen other e-commerce sectors that have reached closer to 30-40%. We think over time, grocery should make it into the mid-high 20s, perhaps 30% over a medium amount of time. But we just think that the pace of getting there is going to be fairly measured, given some of the challenges we laid out there, and thus are a little bit concerned around overall industry growth.
What do you think is the typical premium a user will pay? Let's say it's the same basket, $100 basket of goods in the store. How much do you think they're paying to get it on Instacart?
We've done some pricing work that suggests just on the goods portion, to say nothing of the fees, of which Instacart is, doing a great job of sort of bringing fees down for the consumer. But just on the goods themselves, we've seen some premiums that, range anywhere from, 20 to 30, 40% higher than what you may be able to get at something like a Walmart.
Wow. OK. So then finally, the shares you think would be valued at more like something like $37. They're trading at $43 right now. What would the company say about its plans to address these issues and maybe, get a higher share price as a result?
I think the company is doing a nice job and continues to sort of integrate with their grocers. I think what they would say is that, they're giving their grocers a lot more options to offer sort of like-for-like pricing on their platform that looks similar to in-store pricing. They're doing things with the in-store loyalty programs that these grocers have and opening that more available to sort of prices that you'd see in a grocery store, and other ways of sort of more tightly integrating with the grocers themselves to open up sort of greater price parity relative to what you'll see in store.